Joined again by Duwayne Bosse as well as Matt Bennett. Duwayne, before we get in the feed and residual use here in the U.S., we just talked about some of the planting issues that we saw across the country again this week. Questions about how it's going to impact overall grain supplies. But as we look at world supplies, what type of adjustments were really big in this latest WASDE report?
There were some big adjustments all over the place, really. First off, USA is starting to recognize the war in Ukraine, obviously, and lowering the crop there, the expectations anyway, and really lowering what they think they're going to export. But on the other side of it, when you look to South America, large forecasts for record crops in Brazil, which we always do in South America. We kind of forecast that record crop, and then if they have weather problems, we trim them back a little bit. So actually, the world stock numbers this week came in sharply higher than the trade was forecasting.
Matt, do you think that could still change significantly, and where would you look for those changes to take place?
Yeah, I don't think that you're going to get a whole lot of corn out of the Black Sea region, as Duwayne suggested, first of all. Second of all, you look at the noon maps again, as we did this show, and no doubt that it's dry in the safrinha crop area. And so there's no question that that crop right now is forecasted to be a mammoth, especially compared to last year when they had major crop issues. But, at the same time, I've got to think that could have the tendency to come down just a little bit, first of all. Second of all, slash in demand by 15 million tons was interesting to me. I think that whenever you have cheap and abundant supply of feed wheat around the world, you could probably make that case. That certainly isn't the case this year. And so I'm not so sure that they're going to be correct in the assumption that this demand is going to drop as strongly as what it is. So, and then the other thing is you look in China, they're talking less corn acres and more soybean acres. And yes, they're slashing Chinese import demand. I'm not totally sure that's what's going to happen. I mean, I'm talking China came out and said that here the same day that we had the USDA report. So, I've got to think moving forward that your world demand is going to stay very strong, first of all. And second of all, supply isn't going to be quite as abundant as what the USDA says, at least on ending stocks basis, from my vantage point.
Similar questions when it comes to wheat. Duwayne, as you look at theirs, we see a shift in acreage potentially in that northern plains area due to Mother Nature. I mean, do you think we attract more wheat acres, soybean acres? And at the end of the day, when you look at these adjustments that USDA made to wheat, do you think it's too early or not enough?
No, I think it's good they made the adjustments, and I think the market's doing its job by rallying. And we got Minneapolis wheat above $13. I do have producers to the north of me in the heart of spring wheat area saying that they're going to cut back on corn acres if we get rain this week and weekend, and then they're going to plant more spring wheat. They'll plant spring wheat until that first week of June as you get to the Canadian border. So actually, it's possible we could gain some spring wheat acres, but there's going to be a lot of prevent plant there as well. But yeah, very interesting world situation. Why not try to plant it, as much as you can? So I don't know. I'm still leaning that the corn and soybean acres are going to come in lower than anticipated.
Feed and residual usage on the U.S. side, Matt, we did see some adjustments there lower. Is that a product of demand destruction, or is that another factor that's at play there that we lost some of that demand?
Yeah, definitely they're looking at the cost of feed being a little bit of a demand destruction situation. Cattle moving forward, some of these cattle have been brought to market a little early, and you've seen some cows slaughtered. I've got to think the cattle numbers on out into the second half of the year are going to be quite interesting, especially into the fourth quarter, first quarter next year. But I think feed and residual usage for the next 6 to 9 months is still going to be strong enough that I don't know that I want to slash it 300 million bushels off of what the outlook for them numbers were. I think that's a bit excessive, quite frankly. And again, last year, there's a lot of cheap feed wheat that got fed when corn prices rallied substantially, and cheap feed wheat does not exist this year. So it changes the dynamics of that a little bit. I think that was a bit too aggressive, and I don't necessarily agree with 100 million slash in exports as well, especially considering the lack of corn that's going to be coming out of the Black Sea region. So I'm not so sure that the demand is going to get slashed the way that it is. And if their yield comes in the way that they forecasted it, this 177 matching last year's, you're looking at an extremely tight carryout for this new crop situation.
Duwayne, real quick, if we do have a significant number of prevent plant up in that northern South Dakota as well as North Dakota area, looking back at 2019, the last time that we saw, really wet conditions, at what point then does that really start to impact the markets?
Probably mid to late June. Right now, USDA is forecasting about 2 million acres of prevent plant, which would be close to last year's number. The average is around 4.5. And right now, as wet as we are, we're looking wetter than normal. So mid-June, that should really start to hit the market when we talk about it. And I agree with Matt's points all the time. I sit here, nod my head, that feed and residual cut is too much. One really important thing to nail home here is that we have these high prices and we haven't rationed demand yet. So that's very bullish.
All right, Duwayne, Matt, thank you for joining us this weekend. We really appreciate it. Let's take a quick break and then we'll have much more right here on U.S. Farm Report.